Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. Let's get into today's video on this Monday, September 22nd, 2014. Markets are in sell mode today. NASDAQ is taking the brunt of the selling pressure, down 1.3%. That's 60 points on the NASDAQ. The S&P 500 is down 15 points. Dow Jones Industrial Average is the strongest index today, only down about 0.5% or 79 points. Now, what are we seeing here? I mean, why is the Dow the strongest while the NASDAQ is the weakest? In fact, the Russell is actually even down more than the NASDAQ, but we're focusing on the main three indexes right now. What you're really seeing, and whenever you see the Dow lead, it's telling you that people are heading for safety. So again, if you look at the Dow Jones Industrial Average, we can take a look at it right here. The DIA is down today, but again, it's not down much at all, just down about 4.46%. While if you look at the QQQ, it's down 1.2%, and the IWM is really taking a beating today, down 1.36%. And again, that's telling you that people are selling risk. That's how you analyze it. All right. Having said that, folks, again, there are some really interesting chart setups in motion. One of the main ones that's catching my eye is the reversal in silver. So last night and Friday, let's start with Friday. Friday, silver absolutely was crushed. You can see here, again, spot silver, I think, was down close to 3% on Friday. Overnight last night, silver had a huge sell-off where it was down literally about 2.5 to 3% again. Yet, however, what we've seen here is a reversal on the SLV, where it's barely down at all, just down 0.6%. And if you look at the chart of spot silver, I don't have that to show you, but if you go to on any website that has the spot price of silver, the spot, and you go to the daily chart of that, you actually have a bottoming tail on silver. So again, just a heads up, you may have a longer term low being put in on silver today. What you want to see tomorrow is follow through. If silver moves higher tomorrow, after putting in a bottoming tail, that should solidify a reversal is in place and look for higher prices on silver in the coming weeks. All right. Other things that are on note here, again, a couple other side notes. LUV continues to see some selling pressure after a very big engulfing reversal candle on the daily on Friday. This is important, guys. See this candle right here, this big red one? Notice how it opened above the highs from Thursday here. So see the green candle and then the red above the highs it opened, sold off and closed below the lows. That's what we call a reversal engulfing candle. All right, and an engulfing candle essentially means that you have a major potential top in place. The fact that we're seeing follow through to the downside today is also a signal that it continues to solidify a most likely scenario for a top. So heads up on that. You have a potential top that looks like it's confirming today on Southwest Airlines LUV. All right, now again, one thing you want to take note of and why I keep bringing this up, and I've talked about this for quite a while. First of all, look at the weekly chart. This is the weekly chart on Southwest Airlines. I mean, look at this. It was basically in 2012, it was flatlining around $8 a share. It's now at 34. I mean, if you just go to a year ago, the stock was trading at like 13 bucks, and it's now at 34. And that's after selling off. It was above 35 on Friday. So, I mean, if you look at a chart like this, an extended chart like this, and here's the monthly chart, which is even more ridiculous. I mean, look at this on the monthly chart. A monthly chart that is extended or a weekly or a daily doesn't necessarily mean the stock is going to definitely pull back. But once you get that reversal candle, that engulfing candle, then it simply pushes the odds in that favor. So, you know, with the engulfing candle, with the reversal, with the confirmation today, when I look at this chart on the weekly and the monthly, that kind of gives me more confidence. And therefore, again, as I told people in the No Hype Live broadcast on last night, Sunday night, that I picked up puts on LUV on Friday. So, again, I'm in puts on LUV at $1.30 on the January of next year's 33 strike. So I picked those up, paying $1.30 for them. And again, that's the 33 strike expiring in January. So I'm giving myself a lot of time just in case as well to really solidify that. All right, let's go back to the markets. That's what I want to talk about, a couple different stocks there. And now I just want to give you guys an overview of what's going on here on the S&P 500. Well, I think Friday's price action was very telling. Now, what does that mean? Well, if you look at the market on Friday, right, the market had a lot of positive news, and it did not go higher. It basically was flat to slightly lower. S&P was down a point. Dow was up a little bit, which again shows a rotation to safe stocks, and the NASDAQ was down significantly, decently there. All right, so when you see a market that had the Scottish referendum vote no, which is what the market wanted, and Alibaba's IPO and all that hype leading into it, and the market still goes down, or still is flat, that's telling you people are at a short-term top. When you see a continued move today, that's even more so. So to me, Friday could have been an options expiration kind of shenanigans, but you're seeing follow through today, and that to me shows weakness. So again, for me, I've got to be in the camp that the markets could come down a little bit more here. All right, yeah, sure, they're going sideways. They could always bounce a little bit. But overall, reading the tea leaves, if you will, reading the charts, you have to think, again, that the signals are there in the charts that there's something wrong with this market. All right, Friday, you should have had a nice up day. You should have had a very significant update. I mean, Alibaba debuted. That was great. A lot of hype there. The no vote in Scotland on being an independent country was a positive for the currencies in the debt market. And all of a sudden, the markets basically opened at their highs and just sold off the rest of the day. Today, we've seen a continuation of that selling. All right, so just a heads up on that. I think that's an important little factor that people need to pay attention to. Going over to a couple different charts here, if we take a look at the dollar chart, dollar is basically up slightly on the day. It's interesting that silver's been able to claw its way back, even though the chart of the dollar is still stronger. Gold today, take a look at gold, down basically flat. Gold actually went nicely positive here, now is consolidating. Gold may have reached a short-term bottom as well. JP Morgan Chase here down 6 cents. Goldman's down about 23 cents. Amazon is taking a hit, down about $10. Look at that sell on Amazon, guys. That's, by the way, the reason why Amazon is selling is because of Alibaba. All right, if we go to the chart of Baba here, look at this, down 4% today. And what I think is so crazy, and this is just a little anecdote I want to throw out to you guys that I think is significant. So the media pumped how Alibaba was up like 35% on the first day of trading. That's BS. That's flat out BS. Because again, yeah, sure, from the $68 level the institutions got, yeah, it was up 35% or so. But if you bought it when it started trading, you paid $93 approximately. And where's it trading now? $90. It means you're negative. All right, and there was so much hype. I mean, I still remember Kramer pumping it the night before about, oh, you know, if Alibaba, anything above 80, even paying over 80 is okay. Now, granted, it opened well above that. Hopefully people didn't make the mistake of buying it there. But the point is, again, I mean, you can't be fooled by this stuff. I mean, the media is just such a skewed kind of indicator there, especially on this in this scenario, that I think it's warranted to speak of it. So, again, Alibaba down 4% today. That's a big market cap stock. I mean, that's dropping. Look at Facebook, by the way, down $1.60. Nice sell-off there. Twitter, down $1.40. I mean, you're having some nice sell-offs today in a lot of these high-tech names, these high-beta names. And we talked about how the NASDAQ's taking the beating today. So, in any case, guys, that's what I have to say for you guys today. Let's keep our eyes and ears open. A market, again, I am negative on it overall, especially considering the price action. I think the price action is very bearish. Think about this. Where's the next catalyst for upside? I mean, the Fed's done now. Earnings are not coming for another month or so. We still don't have anything new from Russia that's positive. That's only negatives. Global economic growth is stalling. I mean, there's just nothing positive out there to be a catalyst. You had Alibaba and the referendum vote, but that's it. I mean, that was already done with, and the markets didn't rally on that either. So in my opinion, the easiest angle is to the downside short term, and that's probably where we're going to head. All right, guys, take care. Have a great afternoon, great evening. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial. 7 days to the research center. That's where we give out swing trade alerts. I already gave out a new trade today, guys, and a very good one at that, and that one is already in the money. So come join us here. You'll get these trades. You'll get all the trades. Come join us at InTheMoneyStocks.com.